Massachusetts family took their car to Florida for the winter, like they'd done for years. They forgot to complete one questionnaire from their insurer. A few months later, an accident occurred, over $100,000 in damages, and their insurance company denied the claim entirely. Their reasoning: no one told them the car was garaged in Florida half the year. Nearly 1 million Americans snowbird to Florida each winter. Another 300,000 head to Arizona. Thousands more split time between multiple homes across different states. And most of them have no idea that their car insurance might not protect them the way they think it does. Today I'm breaking down the legal requirements, the registration strategies, and the insurance structures that protect you when you live in more than one state. This isn't optional knowledge. One mistake here can leave you uninsured exactly when you need coverage most. Let's make sure that doesn't happen to you. First, let's establish the rules. Different states have different requirements for when you must register and insure a vehicle locally, and these rules are often misunderstood. The core principle: insurance companies generally require your car to be insured in the state where it's registered and where you primarily use it. Primarily typically means where the vehicle is garaged, where it spends most of its time. When you move permanently to a different state, you must usually register your car and obtain insurance in that new state, typically within 30 to 90 days, depending on the state. But for part-time residents with multiple homes, it gets complicated. Florida requirements. Florida is the most common snowbird destination, and their rules are strict. According to state law, if you stay in Florida for 90 days or more, consecutively or not, you must register your car in Florida and obtain Florida insurance. Florida is also a no-fault state, which means personal injury protection, PIP coverage, is mandatory. If you're spending significant time there, you need to comply with these specific requirements. Arizona requirements. Arizona is more lenient. If you live in Arizona for less than 7 months per year, you're classified as a part-time resident and don't have to register your vehicle there. You can maintain insurance from your primary residence state. The 183-day rule. Most states use a 183-day rule to determine statutory residency. If you spend more than 183 days in a state, about 6 months, you may be considered a resident for tax, registration, and insurance purposes, even if your domicile is elsewhere. This matters enormously. Your domicile is your permanent legal home, the place you intend to return to. You can only have one domicile, but you can be considered a resident of multiple states simultaneously based on time spent. The bottom line: know the specific requirements for every state where you spend significant time. Ignorance is not a defense, and the consequences of non-compliance can be severe, including denied claims and potential fraud allegations. The good news is that insurance companies recognize the snowbird lifestyle and have developed solutions. The key term you need to know is the snowbird exception. How it works: if you keep one vehicle that travels with you between homes, many insurers offer provisions that allow you to maintain insurance in your primary state while spending extended periods elsewhere. Here's the critical distinction. If your car moves with you, you may only need one policy that you rewrite for different states seasonally. If you keep cars in both states, you'll typically need separate policies for each vehicle. One car, two homes. Let's say you live in Ohio 8 months of the year and Arizona 4 months, and your car travels with you. According to Progressive, you'd have an Arizona policy for the fall and winter months. When you move back to Ohio for spring and summer, you cancel your Arizona policy and start an Ohio policy. This is called rewriting your policy for a different state. This approach requires proactive management. You need to contact your insurer before each move to update your coverage. But it avoids paying for 2 policies simultaneously. 2 cars, 2 homes. If you keep a vehicle at each residence, which many snowbirds do for convenience, each vehicle needs its own policy insured and registered in its respective state. For example, you own a home in Massachusetts and a condo in Florida with a car at each. Your Massachusetts car is insured in Massachusetts. Your Florida car is insured in Florida with proper PIP coverage. These are 2 separate policies, potentially with 2 different insurance companies. The communication imperative. Whatever your structure, you must inform your insurance provider about your snowbird status. This includes where the vehicle will be garaged during different seasons, how long you'll be in each location, whether the vehicle travels with you or stays in one location. Most auto insurance carriers now include specific language in their policies requiring the vehicle to be garaged in the originating state for at least 6 months per year. If you violate these terms, even unknowingly, your coverage may be void. Vehicle registration and insurance are linked. You generally can't insure a car in a different state than where it's registered, except in rare circumstances, so registration strategy matters. Where should you register? Several factors influence this decision. Insurance costs. Rates vary dramatically by state. Nevada, Florida, and Michigan are among the most expensive states for insurance, over $250 monthly on average. Meanwhile, Maine, Vermont, and North Carolina are significantly cheaper. Registration fees. Annual registration costs range from under $50 to several $100s depending on the state and vehicle value. Sales tax. If you're buying a vehicle, sales tax varies by state. Some states also have personal property tax on vehicles. Emissions and safety inspections. Requirements vary. Some states have strict annual inspections, others have none. The strategic reality. Some people are tempted to register vehicles in states with lower costs, even when they primarily use the car elsewhere. This is called rate evasion, and it's illegal. Your vehicle must be registered where it's primarily garaged and used. Misrepresenting this information is insurance fraud. Beyond the legal issues, if you file a claim and the insurer discovers the misrepresentation, they can deny your claim and cancel your policy. Multi-state registration. You cannot register the same car in two states simultaneously. Each vehicle has one registration at a time. For snowbirds, this means choosing your primary state, typically your domicile, and handling the other state through the snowbird exception provisions. Military exception. Active military members get special treatment. Under the Service Member Civil Relief Act, military personnel can maintain registration, insurance, and driver's licenses in their home state regardless of where they're stationed. This continues until they have a permanent change of station, PCS order. Let me give you the specific strategies that protect multi-state vehicle owners from coverage gaps and denied claims. Strategy 1. Work with one insurer. If possible, use the same insurance company for all your vehicles and homes. Companies like State Farm, Allstate, and Travelers operate in all 50 states. Benefits include bundling discounts across multiple policies, simplified communication and coordination, consistent claims handling, single point of contact for questions. Ask specifically about multi-state discount programs. Farm Bureau Financial Services, for example, mentions they can often bundle coverage for both homes and secure optimal rates. Strategy 2. Umbrella insurance. If you own property in multiple states, umbrella insurance becomes even more critical. An umbrella policy provides additional liability coverage above your auto and home policies. It typically covers you in all states where you have property or vehicles. For snowbirds in particular, you're driving in different environments with different risks. Your liability exposure follows you wherever you go. An umbrella policy, typically $150 to $400 per year for $1 million in coverage, provides consistent protection regardless of location. Strategy 3. Document everything. Keep meticulous records of travel dates between states, mileage readings at each location change, communication with your insurer about your snowbird status, copies of all policies and endorsements. If a claim is ever disputed, this documentation becomes your defense. Strategy 4. Annual review. Your situation may change year to year. Maybe you're spending more time in your winter home. Maybe you've decided to drive one car year-round instead of keeping two. Review your insurance structure annually before winter migration season to ensure it still fits your lifestyle. Contact your insurer, explain your upcoming year's plans, and confirm your coverage is appropriate. Strategy 5. Understand what happens during transition. When you're driving between states, the actual migration, you're covered by your current policy. Insurance follows the vehicle, and your coverage automatically adjusts to meet the minimum requirements of whatever state you're driving through. However, this automatic adjustment only applies during transit. Once you're established at your destination for an extended period, the snowbird provisions kick in. Let me share the mistakes I see most often and how to avoid them. Mistake 1. Not disclosing seasonal living. This is the big one. People don't think to mention that they're spending 4 months in Florida because nothing has changed. They're still the same driver, same car, same coverage needs. But from the insurer's perspective, where your car is garaged fundamentally affects risk and rating. Withholding this information can void your coverage. Mistake 2. Assuming coverage transfers. Automatically, your Massachusetts policy doesn't automatically become valid Florida coverage when you drive south. The policy provisions need to accommodate your multi-state use. Don't assume, confirm. Mistake 3. Dropping coverage to save money. Some snowbirds cancel insurance on the car they're leaving behind. parking it in their northern garage while they winter in Florida. This is risky. A car sitting uninsured can be damaged by weather, theft, or vandalism. And if something happens, you have no coverage. Additionally, gaps in insurance history can increase your rates when you reinsure. Instead, ask about storage or comprehensive-only coverage that protects against non-collision events at a reduced premium while the vehicle is parked. Mistake 4. Forgetting about recalls. When you're splitting time between addresses, mail may not reach you promptly. Recall notices could arrive at your northern home after you've left for the season. Check your vehicle periodically using NHTSA's VIN lookup tool, or contact the manufacturer to keep both addresses on file for correspondence. Mistake 5. Not coordinating with property insurance. Your homeowner's insurance also has implications for extended absences. Many policies require you to notify them if a home will be vacant for extended periods. Your snowbird lifestyle affects multiple insurance relationships. Manage them holistically. The snowbird lifestyle represents something beautiful: the freedom to follow the weather, to enjoy the best of multiple places, to live where life is comfortable rather than where circumstances dictate. But that freedom comes with complexity. Insurance across multiple states isn't difficult once you understand the rules, but getting it wrong can be catastrophic. The Massachusetts family I mentioned at the beginning lost their coverage over a questionnaire. Don't let that be you. Talk to your insurer. Be proactive about disclosure. Understand the specific requirements of every state where you spend significant time. And document everything. That's how you protect the lifestyle you've built. Subscribe to American Money Moves so you don't miss what's coming next. Smart money, strategic living. See you in the next one.